This conference will now be recorded.
Okay, so we are working through this accounting cycle. In step one, we analyze transactions and make journal entries. Steps 3 and 4, we post to the ledger and prepare a trial balance. Steps 5 and 6, we'll get into next week, making adjusting entries. But we're on step 7 and 8, which is preparing financial statements and closing the accounts. Preparing financial statements and closing the account, which is our ultimate objective in this course, that you can go from analyzing transactions to preparing financial statements and closing the accounts. The financial statements represent a summary of all of the journal entries that were made. And so they're summarizing all of these journal entries into several statements. You never see the journal entries for a company posting to the ledger, trial balance. You never see that. The only thing you see are the financial statements. So we learn in this course how to prepare them so you understand what's involved. And we said that in making journal entries, we have that accounting equation. And for assets, when the assets go up, we debit it. When it goes down, we credit it. Normal balance. Liabilities, when we credit them, they go up. When we debit them, and then normal balance is a credit. Common stock is working the same way. Retained earnings, our new account. If retained earnings has a credit balance, the company is doing well. If it has a debit balance, the company is not doing well. So you always want to keep that in mind. So we can go back up for just a second to that accounting equation. And with the accounting equation, see assets equal liabilities plus stockholders' equity, which is common stock plus retained earnings. And remember, the business is trying to increase its assets by increasing retained earnings. Assets have a debit balance. We need retained earnings to have a credit balance. And retained earnings is always revenues minus expenses minus dividends. These are temporary accounts so that we can get the financial statements prepared. Then we close them until the retained earnings and making a determination whether that retained earnings is positive or not. And as we said, the purpose of a business is if you start that business and you invest $100,000 in cash, we want to increase the cash through earnings. We want to increase the cash through earnings. So cash needs to go up, retained earnings go up. And we talked about the fact in making journal entries that a debit involves receiving something of value, a credit involves giving up something of value. Now, you have your journal entry types, and we will begin to pick up on more of these journal entries types. But you should always remember when cash increases, it's 1 through 6. Cash is debited. When cash is paid out, it's 7 through 11, and cash is going to be credited. Transaction 12, these are transactions other than cash, and key ones, you purchase assets utilizing debt. But there are others that we'll be looking at. And here's a sale on account 15, which we see a lot of. But we'll begin to move through all of these eventually. Then we have some liability transactions other than cash that we will move in also. So the 20 types, we worked on the first basic ones. You still should be able to read and go in here and find a type. And here's your chart of accounts. It is still very important. And note your normal balances here. And you always got things in the order of the chart of accounts. And I think as you working them problems, you see that things fall out pretty easy when they're in order. And like I said, we introduced that retained earnings accounts. All the accounts below retained earnings are temporary retained earnings accounts, where we measure whether the business has performed well or not. We've made journal entries over and over. We've posted these journal entries to the ledger over and over. We prepare trial balances, and we know that that trial balance has the balance. Then we prepared an income statement. Notice the format of a basic income statement, revenues, and we should have less the returns up in here, net revenues, then we subtract cost of goods sold, gross profit. We'll get into merchandising material after the break, but we haven't gotten that yet. So we just have the operating expenses and we're subtracting those. Interest income is where we get, interest on a bank account. That's not operating. These are our revenues here, renting those cars out. So if we get other income, sometimes we'll separate it out. No exact way we operate that income statement, but in general, the operating items and non-operating items. Then we have the net earnings before taxes. So as a student, you'll be calculating taxes at a tax rate to get the net income after taxes. So you will be moving, I've given you the tax expense, but you'll be calculating the earnings, applying a tax rate to get the tax and the final net income. The statement of retained earnings is a simple statement. The retained earnings at the beginning of the year, which has been zero, plus the net income, less the dividends in retained earnings. This is all we want to see in a retained earnings account, income and dividends, because as we said, whether a business is profitable or not depends on whether it has a positive retained earnings. So we don't want companies to have the ability to put false things in here to fool you that the earnings are going up. Then we prepared a balance sheet. A balance sheet reflects the accounting equation, assets equal liabilities plus stockholders' equity. And on the left or at the top are the assets. Current assets, long-term assets, total assets. On the right or at the bottom are the liabilities and the shareholders or stockholders' equity to come up with the total liabilities and stockholders' equity. And on our balance sheet, there are no accounts, below retained earnings. And it has the balance. So the functions of financial statements, we have our beginning balance sheet, which is where we were. The income statement tells us what happened. The cash flow statement is going to tell us what did we do with our cash. Then the statement of retained earnings is going to tell us how much of the income was retained in the business. and we end up with the ending balance sheet where we are now. So where we were, where we are now. Let's see if we can. Let's see if we can talk about closing entries. And what you need to realize that there are two types of accounts. Permanent accounts, and that spreadsheet has all the permanent accounts above the line. Those accounts carry over to the next year. Just like with you personally, your cash account, your jewelry, your cars, the liabilities you owe, whatever is there on December 31st of 2021 is going to be there on January 1st of 2022. Those are permanent accounts. But the income that you earn, it's going to cut off on December 31st. You're going to file a tax return. And when 2022 starts up, you're starting over. And so that's what happens with the business. Okay. So temporary accounts are just temporary retained earnings accounts that we close out. And in closing, we got the summary of the closing entries. Closing entry 1, we close out all revenue accounts, and then we had returns and allowances. They would be in here. And we debit the revenues. If it was a return and allowance, we would credit it, and we credit income summary. We close out the revenue accounts first. Then we close out all the expenses, and we get the cost of goods sold. That's an expense. So we're going to debit income summary and credit the expenses. Closing entry 3 is always the net income or net loss on the income statement. If it's income, we debit income summary and credit retained earnings. But if it's a loss, we reverse that. We debit retained earnings and credit income summary. Closing entry 4, we close out the dividends. And so I've got those on the spreadsheet, but there are 4 closing entries where we close out all of the temporary accounts, all of the accounts below retained earnings, in the retained earnings to see whether ultimately in retained earnings increase or decrease. And we'll look at an example today. So are there any questions? Are there any questions on anything that has been said?
Honestly, yes, sir. Last week I was dropped from my classes and I just got put back in Thursday night. So the homework that you said was due today, I see the where to submit it, but I don't see like the actual homework sheet. Financial statements, homework 2, trial balance 2.
Okay, you remember you had those trial balance quizzes? You're going
Yes, sir.
back to assignments where the trial balance quizzes are, and we're working each one of those now. So we did the trial balances. Now we move into these steps. So it's what's there. You should go back to the trial balance quiz assignments.
So there's nothing due today?
Yes, the first one was due today.
Ooh.
So we're going to do quiz 1.
We did quiz 1 in class yesterday. And attending this class, because I'm using GoToMeeting, has nothing to do with, so I guess that's a good thing, whether you are in the course, or not. All you got to do is sign up in here. I guess if I was using Blackboard, that would not be possible with their Ultimate or whatever. But so this is independent. You know, I paid for it personally. I couldn't get, you know, when we had to make that quick switch, I couldn't get, you know, what you call it to work. So I just went on and bought this myself and used it. Okay.
Yes,
So you don't
sir.
have to worry about whether you're in the course or not. You just sign in.
All right. Yes, sir.
But yeah, they do go there and they drop people. They just do all kind of stuff. And it does cause problems. I agree with that. But I just work here and try to do my best. Any other questions now? Or can I just give you all a quiz?
Mr. Boyd, can I talk to you after class?
Certainly. Let me go and do my roll right quick.
No, Cap, I need to talk to you too.
That's fine.
All right.
Is for the homework, is it gonna be like an extended time for today? I didn't know that was due today.
Who said that?
Jalen.
Only if your camera's on. You know, so if your camera's on, I might give you a little extension, but if you can't get your camera on,
You don't need that.
because there's a big correlation between your camera being on and you're paying attention to what's going on, okay, and not missing things. So if a bunch of people, 15 people turn it in and you didn't turn it in, why did that happen?
I saw.
So you don't have to answer, but what you got to realize, as we said when we went virtual, you got to operate like you in the classroom. No side things going on. You paying attention. That's the only way it works virtually. I can overall teach better virtually in terms of working with my computer here, because I just have whatever's in the room. So, you know, so listening is a key thing that you've got to do. So, you know, so I'm not so much concerned about you didn't turn it in as opposed to why did you not turn it in? Why did you not hear what I said? See, that's the issue. And in the world that we're in now, you got to listen. So you should now be turning to Trial Balance Quiz 2. So everybody begin to turn in that quiz. And if you didn't submit me a spreadsheet, you get a spreadsheet out to work on it. Now, once again, with accounting, you cannot watch and learn how to do it no more than you can watch and learn how to swim. Okay? It does not work that way. You got to do the work. And of course, we have simplified your work, plus really increase one of the key tools you have is by working with Excel. So everybody should be pulling up the problem. And as soon as I find Trammell on here, Harris, I'll be ready. So try to sign on with your last names first, and that helps when I do the roll. Does everybody have trial balance quiz 2 pulled up?
And that's the one we did in class. I think I did that one on paper. 1 and 2 I did on paper.
No, this is the quiz that we had last week, the major quiz on this material.
Professor, was this the test? Like the exam too? Okay.
You mean exam 2? Okay. I'm
Yeah,
thinking
exam.
it was quiz 2 from September.
I apologize. It's exam 2.
Okay. On the Word document?
It's on the Word document, but I don't want you sending it back to me in Word. Here it is. Any questions? Winger, can you give me the first journal entry?
Excuse me, is this due today as well?
This is due today at 11. So just so you know, trial balance quiz 3 will be due at the start of class period.
Did you do attendance?
Thursday. So trial balance quiz 3 will be at the start of class
Did
period.
attendance?
Yeah, I just did it.
All right.
So exam 3 is what you mean, or quiz?
We're on exam 2.
Right now. But you said next week quiz 3 is due, or exam 3?
Should be exam. Excuse me. Exam 3 will be due at 11 o'clock
Tomorrow, or next class.
Yeah, next class period. And we'll see. We'll see. But we do, most people do have the journal entries down. Winger, what's this first journal entry?
It says invested 200,000 to start a business. So it would be a type 1.
Next journal entry for me. Just tell me what it is.
Oh, what? You want me to say the whole thing?
Yeah, just say debit and credit.
Oh, okay. Well, you're debiting 200,000 on cash, and then you're crediting 200,000 on common stock.
Okay. All right, Willem, get the second journal entry. Purchase inventory on account. And I'm just coming from the bottom of the row. So Swan, you next. And then Trayvon Robinson.
I'm on this one right here, or I'm next after this one.
You on this one?
You said
No,
Trayvon Robinson?
Willer is down. You're on the third one, Swan. Then the next one, Robinson. Then the next one, Kamala. So
You
Willer,
said
can
I
you
got
give
number 3?
Can you
Nah,
give
I
us?
got 3. I think you got 4.
All right, bet.
I can just run through the journal entries, but I want to review them and I want to see where we have issues. So I go up top then. So when somebody can't do it, I'm going up top. So Zanab, give me this journal entry.
The second one.
Yes,
All right. It said purchase inventory on account $200. It's type 12. Debit inventory $200 and credit accounts payable for $200.
that's correct. Okay, so going back down to the bottom, Swan.
It's a type 10
Okay,
dividend, 20,000 debit, and then cash you credit 20,000.
okay. So Robinson, go to the next one. Robinson a little bit slow.
It's a type
Nicole,
7.
what do you have, Nicole?
What number are we on?
Number
4.
4.
Okay, I put debited 150,000 for land and then credited 50,000 for cash, and then I put credited 100,000 notes payable.
Okay. Next one, paid the rent. Kamala. Slow. Justin paid the rent.
Sir?
Paid the rent. Give me journal entry numbers 5.
Debit rent expense 25,000, credit cash 25,000, type 9.
That's correct. Noble, do the next one. Paid salary.
Say what's number again?
That's number 6, paid the rent. Paid the salary, excuse me.
And you want us to, that's a type, that'd be a type 9.
Correct. Give me the journal entry.
We're going credit cash and debit 50,000 salary expense.
That's correct. Sheila, the next one.
You go on debit account receivable 250,000, credit sales 250,000, type 15.
Okay, thank you. Next.
All right. Shit. So you buying land?
No, we down here at number, you missed your chance, but Well, go ahead and do it again. Since you're on, go ahead and do it again.
Okay. Hold on, gotta get this piece of paper real fast.
Dr. Boyd.
Yes.
My dorm's Wi-Fi usually acts up when there's like a storm or something that happens. So, can I turn this into you later today?
What do you plan on turning in later today?
This trial exam sheet. I can get it done real quick and turn it into you. Because usually the Wi-Fi starts to act up. I really can't send stuff off. Because I use my laptop.
We'll talk about that later.
Okay, I got it up.
All right.
It's 210 for land.
Okay.
Yeah, and then you're gonna debit the 150,000.
Okay.
Let me see. Then you gonna do 100 for cash?
Not just the opposite. You only pay 50,000 in cash.
No, I'm saying that's the account type, 100, and then you do cash. Then you debit 50,000. Huh?
You're gonna be crediting cash. You debit in the land, crediting cash, crediting notes payable.
Oh, okay. It'll be a type 7 and 12.
Correct. Okay, paid on accounts payable.
Wait, so why you debit the cash?
We didn't say
credit
debit
the cash.
We said credit cash.
Yeah, why you credited it?
Because you paid it out. When cash comes in, you debit cash. When you pay it out, you credit cash.
All right, I got you.
So for number one, we should have credit cash.
No, cash came in.
So we should debit cash and credit common stock.
Correct.
Okay.
Shit, since we're going over it, can we resubmit it?
Let's just go. We'll talk about that later.
Yeah, all right.
Okay. Paid on accounts payable. Kiana?
Sorry. That's going to be a type 8, and you're going to debit cash for 150,000 and then credit accounts payable for 150,000.
Boy, you in the classroom, I come over and hit you in your head. Say that again. Maybe I heard it wrong.
Sorry, you said question 8, right?
Yeah.
Yeah, so you're going to debit cash for 150,000 and credit accounts payable for 150,000.
I tell you. Miller, help her out.
Which one is it?
Number 8.
My bad, it's the opposite.
Well, thank you for realizing it's the opposite.
So you still want me to do it?
Now you go ahead and do number 9.
Number 9, I got 200,000 debit, and I got 200,000 for credit.
Well, what did
then
you
I
debit?
got cash.
What did you credit?
Accounts receivable.
Okay.
Then my type, I got type 3.
Okay.
That's right.
Correct.
All right.
Mayberry, can you handle the found one, number 10?
My mic coming through. Can you hear me?
I can hear you.
All right. So 10 is paid 20,000 principal, 10,000 interest on notes payable. I did I debited notes payable for 20,000 and interest expense for 10,000, and then credited cash for 30,000. It's an 8 and a 9.
That's correct.
Right.
Okay, so these journal entries. So these are the journal entries that you should have. And that's how they should be looking on the Excel spreadsheet. Now, I don't want any backtracking here now. Not submitting my work, especially my A students, not getting my work in.
Mr. Boyd, I have a question.
Yes, Kennedy.
Oh, you say like I asked you so many questions.
Now I like questions because you're helping a whole lot of other people out. So
I mean, I
I
guess.
always like questions because I'm just kind of teaching. And that's why I did the journal entry. If I need to slow down, so that's fine.
Okay, so for number one, I thought. Oh wait. Wait, hold on. Let me get my thoughts together. Okay, so for number 4, I thought you said that we credit cash when you obviously have it for debit.
I guess you're right. I just pulled this up. So thank you.
So it is. So like our numbers and okay.
A long time.
Even though it's supposed to be credit and everything, our for the trial balance and statements, is that I mean not that for the closing entries, is all that gonna change as well?
I doubt it. Still, the rest of these, I just pulled these for the rest of these. Okay. Thank you for that.
So for the can you go to the trial balance and statements?
Of course. So we know that we would do what? Put all these in the T accounts. If it's a debit in the journal entry, it's debit. And if it's credit, it's a credit. So I think that one was posted correct. It just got the wrong place. So hopefully everybody can post to the ledger. Remembering now, you see the permanent accounts up top and the temporary accounts down bottom. You see that, correct? Now these accounts all have to be zeroed out eventually. So let's go to the trial balance. So this is what the trial balance would look like.
Can you scroll down, Dr. Boyd?
Is that better?
No, like where you have the charts at the very bottom. You know what I'm talking about?
Now, all I was trying to do is show the trial balance. What do you want to see?
Okay, you see where it says total assets and it's bolded, and like you know how you said we have to add it up at the end, and the assets and the liabilities should add up.
Down here. We're gonna get down here, but I want to make sure we can get to the top. We're gonna get there, but let's get to the trial balance first.
Okay, but since I did my numbers wrong for number 4, that's gonna change, right?
Yeah. So
okay, so it's not gonna balance the same numbers that you have right there on your screen. I have those same numbers, but my number, never mind.
But that's why we in Excel, so you can make that correction easy.
I know, but I already turned mine in, and I did number 4 wrong.
Oh, please. I just put something up there wrong. That's not the end of the day. We turn it in, you get most of the points. So let's not worry about that. Now, I want everybody to do an income statement. So here is the trial balance. So you don't need to be talking about turning in later. This is the trial balance. Do an income statement.
Professor Boyd,
Yes, ma'am.
so I turned in my work already. I got everything right, but I noticed on my balance part, I forgot to add a zero for my inventory. So I put 20,000 instead of 200,000. But it was a mistake. I knew what I went wrong and I turned it in already.
Okay. Well, I'll let you make up for it. I'll let you explain this income statement in a few minutes. So all I want to happen now is, are there any questions on the trial balance? Most of you can do a trial balance. And hopefully you got it in this order. So if I tell you to do an income statement, Alexia, what would you do?
What do you mean? Like, talking about for the next part?
Yeah. So you Professor Boyd now, and you telling the class how they're gonna get this income statement done. So what you gonna tell
From what I know, from my knowledge, you would first start off with getting the number for sales to start it off, which would be, I believe, 250,000.
Now, if I taught the class saying I believe and stuff like that, how would y'all? So I want you just to tell us. I want you to confidently tell us.
Okay, to start off the income statement, first you need to grab your number for sales, which is 250,000.
So we would grab our number for sales and put it up. We don't have any returns and allowances on this one, so this becomes 250,000. What's the next thing we're gonna do? And that's the gross profit, 250. So what's the next thing you're gonna do?
Next you're going to, for the operating expenses, then next you're gonna get the numbers for salaries, rent expense, and interest expense.
Where are we gonna get them from?
Your trial balance sheet.
So we're gonna go down here. Remembering that the income statement includes everything below revenue. So we can copy these and we can paste those in right there. So what's our total operating expenses?
85,000.
So what's our net income?
165,000.
Are there any questions on that? Okay, so Nadia, what about my statement of retained earnings? And Mackenzie, you could be working on the assets, Hicks the liabilities, Morgan stockholders equity on the balance sheet. So y'all can be thinking ahead. So we see that the purpose of the income statement is to what? Show how much revenue and expenses we made, how much net income we had based on that. What is the purpose of the statement of retained earnings?
Find the income.
What's the purpose of it? How you gonna do it? And we know we got a new company, so this is 0, right? And then what's gonna go right here?
165,000. The
Where does that
income.
165 come from?
The net income.
So we bring down the net income. So our total is 165 right now. Then what do we do next? What's the next line?
Subtracting the dividends.
So we subtract the dividends. So our ending retained earnings is what?
145,000.
145, 000. Are there any questions on the statement retained earnings? As we see, we have a positive amount. We made 165, we paid out that. So that's a key metric in terms of us looking at the financial statements. What happened to the retained earnings? Now we're ready to go to the balance sheet to make sure we're gonna balance. And we said the balance sheet included what? Everything for retained earnings up. So you don't put the retained earnings below dividends, you always have it above it. Got it? And everything from retained earnings up goes on the balance sheet. So Mackenzie, explain to them how they're gonna get this asset side of the balance sheet. And we're just doing December 31st. So what we're gonna do?
We want one of the assets is cash.
So we're gonna look at all of these assets, correct?
Yeah.
Just bring them down. So cash is the first one. We're gonna put on what? 75,000. What's our next one? Account receivable, 50,000. We just bring them down. What's our next asset?
Inventory for 200,000.
Inventory for 200,000. And so our total current assets are what? 325, correct?
Yes.
How much land we got?
150,000.
So our total, that's all we got. So our total long-term assets are what? So what are our total assets?
475,000.
475. Does everybody see that?
So you just add all the numbers up?
Yep.
Okay.
So we got cash, and we subtotal between current assets and long-term assets. I just want you to get used to doing that. But essentially, you adding up all the assets to get total assets. That's all you're doing. Then we're going to go back up here and do a similar thing with what? Liabilities. So who's explaining that to us? Hicks? So how much we got in accounts payable? Anybody help her out?
50,000.
50,000. And that's our only current liability, correct? So it's 50,000. Notes payable, how much we have?
80,000.
So total long-term liabilities is 80,000. So what are our total liabilities?
130.
And that's what? 50 plus 80,000 gives us 130. Now we got to go down here and do stockholders' equity. So can we do stockholders' equity, Morgan? How much common stock we got on that trial balance?
200,000.
200,000. How much retained earnings we got on the trial balance?
0, right?
0. So we put the 0 down. Our total stockholders' equity now is 200,000. But when we add up total stockholders' equity and total liabilities, we only have what? 330. But it's supposed to be the same as this number here. So why is it not 475?
Add the retained earnings in there.
Okay, so we gotta go and pick up this ending retained earnings of 145,000. So it's not the beginning retained earnings that is on the trial balance, but it's the one off of the statement of retained earnings. And so instead of 0, we're gonna put 145 here. And so now stockholders' equity is gonna be what? $345. And our total is now gonna be what?
475.
475. So once we have a balanced trial balance, we can run over here to the bottom of it, do the income statement. Then we can run over here to the statement of retained earnings and get that done. Then we can do the balance sheet. And we're almost done, except what we got to do now, what do we got to do now? Make some closing entries, because every account below this line has got to have a 0 balance. So we've got to make closing entries. And I just set them up. Instead on a separate sheet, I just put them close by. So that you could make these closing entries and post them and 0 out all of those accounts. So what's the first closing entry? Miriam? Somebody help her out?
We're going to debit 250 sales and credit 250 income summary.
So the first closing entry, we always close out the revenue. Debit sales, credit income summary. And of course, we're going to go to the T accounts and post it. So this is closing entry number 1. I just put a 1 that goes to closing entry number 1. And this is closing entry number 1 also. And I'll put them in red, which means that these are closing entries. Okay. So we make closing entry 1 and then we post it. The second closing entry, we're going to do what? Well, we're going to do the second closing entry. Michael?
Yes, sir.
What you going to do in the second closing entry?
Let me go back up to my sheet. I'll tell you. You're gonna have income summary. You'll debit that for 85,000, and then you'll copy the from operating expenses. You'll get salary expense, rent expense, and then entrance expense, and then you'll credit all 3 of those.
Okay.
And then you'll go over.
In the second one, we close out the expenses. Then in the T accounts, we're going to debit income summary. So we got a 2 here. Then we're going to credit all of these expenses. So this is closing entry 2, closing entry 2, closing entry 2. Then to distinguish them from the regular entries, we're going to put them in red. So once we make these closing entries, you notice all the accounts are closed out except 2 over here now. So closing entry 3, Kiana.
Your for income summary, that the net income 165.
Well, we're going to credit.
And then 165 for retained earnings.
So those are standard entries. And now let's go in here to the trial balance, to the T accounts, and post closing entry 3. So this is closing entry 3. Now land should be up here on this. I just sort of copied this in. The land is supposed to be up here somewhere. I won't take off too much for that, I don't guess. Okay, so these are closing entries. So we're now going to red, yeah, and make it red. And we got a final closing entry that we want to make. So who's going to make our closing entry number 4? In closing entry 4, we close out the dividend. That's why I got it down here by dividends. So we simply debit retained earnings 20,000. And we credit dividends 20,000. So this is closing entry 4. Whenever we make a closing entry, we post it. So closing entry 4. Closing entry 4. So at the end of the day, when we post those closing entries, retained earnings goes from a 0 balance to 145. It goes from a 0 balance to 145, which is that balance on the statement of retained earnings, which is that balance on the balance sheet. Are there any questions? Are there any questions?
So we got a little bit more time to turn this in.
Now you got time to start working on number 3. We just did it completely. So.
Well, I would have been turning it in, but I didn't get the new steps that you were going over. I mean, I kind of got it now, but
Got it now?
Yeah, just a little bit.
You got it just a little bit now.
Yeah, it's still kind of confusing, but I'll be good.
Okay, so we worked on this one together, so you see it. So what I want you to do now is to go to problem 3, well, exam 3. And I want you to do 3. So because, I've already, I worked this one out for you. You don't need to turn this one in. Let's see. But